Many people jumped in to Safaricom when Safaricom listed. It was touted in Uganda. Everyone was talking about buying into Safaricom. And I think they floated the price at 5 shillings. The price went up momentarily when they just floated to about 7 or 8 shillings. So some people made some gains. If you bought at 5 shillings per share and you bought lots of shares and it went to 8 shillings, you've almost doubled your money. But then it dropped. It started dropping and went down to as low as 2 shillings. So people felt they'd lost their money and they started selling. When you sell, when it's dropping, you're in trouble. Those who held out, the price started climbing afterwards. Now, most people sold at 2 shillings. They thought this is a terrible thing. We've been duped. The price started climbing. It went up to 20 shillings. Now, people who bought at 2 shillings when it has dropped, they jumped in. They were running against the herd. The herd mentality is everyone's running out of Safaricom. You are a contrarian investor. You go against the herd. You start buying when the price is down. Then they bought a lot of shares at 2 shillings. When it went to 20, they paid a killing. And then you sell some of them, keep some of them, risk-free. So those are smart investors. So that's just one example. I think last week or this week, Safaricom declared its profit. And it was a record-breaking profit in East Africa. No company had ever declared a profit, the equivalent of 55 billion Kenya shillings in 1 year's profit. So you multiply that by 35 to work out what it is in Uganda money. That is about the total collection of Uganda's tax, 1 year. That's a lot of money as a company. So those who invested have done very well. And if you do well in a business, people tend to come after your stock. The price should keep going up because you have got clearly a trajectory, good management, sound structures. So it is smart to invest in the stock market. Globally, the stock markets in Europe, in America, in Asia have made many people become millionaires because the price just goes up. You invested and the price went up. Those who bought shares in iPhone or in IBM, in some of those big companies, Coca-Cola, they've done incredibly well over time. So the stock market largely outperforms the property market over time. Now in Uganda, it's been a checkered affair. Some stocks have done well and then they've done extremely poor. I know that BAT did very poorly at the beginning. Today it's doing extremely well. Kajansi Clays began very well. It's doing extremely poor. Those who invested are still biting their fingers for investing in that. I don't want to pinpoint. Stanbic did well at the beginning and it seemed to have flatlined, but it's doing very well. A company that's got a good structure, good management, a good business plan that is bound to keep growing is a company worth investing in. So don't invest like you are going to the lottery. Do your homework, your research again. Research is fundamental to success. It's very hard to just get success without doing adequate research. And it's not very hard. If you spend an hour a day on researching the stock market of Uganda, at the end of 1 month, you will be a very authoritative investor because there isn't that much to learn. Only 1 hour a day. But people just don't have the discipline to form that habit. After that, you start learning what to read, what to watch out for, whether it's in the newspapers or on Reuters or on the internet, to know what's happening around that business. You have to do some research around the business. And that's why investors, great investors like Warren Buffett, he's been an investor over a long period of time. He invests, he does his research before he invests his money, and his rule number 1, do not lose money. He doesn't lose his shareholders' money. He invests wisely and he stays for a long haul. Don't get in and get out so quickly. You will lose money.